Warren Buffett, the world's most successful investor, is so confident in his investing advice that he gave the same advice to you and me that he gave to the one and only LeBron James. Take it away, Bron.
Well, actually, I have two questions that I would like to ask Warren Buffett. My first question would be, what should I invest in next? Can I have some tips?
And I'll show you the answer to that question in a minute, but first I want to paint you the full picture so that you can understand the why. So let's get into it. One thing that I love about Warren Buffett is that he appeals to everyone. He's got advice for expert investors, intermediate, novice, and most importantly, for people who have never invested before and don't even know where to start. Anyone can do it at any level. We're just not taught about that in school, and you don't have to be a genius to invest. And here's what he has to say about that.
You don't need a lot of brains in this business. I mean, I've always said if you got an IQ of 160, give away 30 points to somebody else because you don't need it in investments.
Like he said, you do not have to be a genius to invest, and anyone can do it. And the coolest part is, even though LeBron James makes tens of millions of dollars more than all of us combined, Buffett still believes that this is the best strategy for 99% of people out there. But while his advice is universal and easy enough, and you'll see as this video unfolds, it does depend on a few important criteria to determine whether or not you have what it takes to invest, and no, money is not one of them. The first criteria is knowing and understanding what you are investing in. One pattern that is extremely consistent with some of the best investors in the world, the Buffetts, the Lynches, the Mungers, is that they only stick to what they understand and know and steer clear of everything else.
It never bothered me if people disagreed with what I thought, as long as I felt I knew the facts. I mean, there's a whole bunch of things I don't know a thing about. I just stay away from those. So I stay within what I call my circle of competence. You know, Tom Watson said it best. He said, I'm no genius, but I'm smart in spots, and I stay around those spots. Well, I try and stay around those spots. I think that really is much more important, frankly, than having a few points of IQ or having an extra course or two in school or anything of the sort.
Now, the second criteria is one of the fundamental keys to his success, and it is twofold. The first is the control that he has of his emotions, and the second is his ability to block out external noise. And here's two separate occasions where he's talked about emotional investing and how it can get you in trouble.
What you do need is emotional stability. You have to be able to think independently, and you have to be when you come to a conclusion, you have to really not care what other people say and just follow the facts and follow your reasoning. And that's tough for a lot of people.
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because a stock goes down, you shouldn't own a stock at all.
No, I mean, what are dumb things? Selling a stock because it goes down?
Selling a stock because it goes down. Some people are not actually emotionally or psychologically fit to own stocks, but I think more of them would be if you get educated on what you're really buying, which is part of a business. And the longer you hold stocks, the less risky they become.
It's only natural for us to feel fearful when the market's doing poorly. And it's also natural to get FOMO when something that we're not invested in is all of a sudden going really, really well and we're not invested in it. But one thing that's consistent is that both of those events are going to cause you to make decisions that are not in your best interest. And don't worry, I'm getting to it. I will make it very clear what his strategy is in just a minute. Now, this strategy that Buffett suggests for LeBron and for you and me is actually not at all what he does for himself, but there's a good reason for that. Not everyone is capable of investing the way that he does. We don't have his capital. We are not in his situation. We do not have his expertise and his skill, his experience, his age, his wisdom. There are so many different elements that go into doing what he has done for so many years. But what he does suggest that everyone does has been proven time and time again to be a successful strategy. In fact, it's worked for over 100 years, and I don't, and definitely he doesn't think that that's going to change anytime soon. So without further ado, this is what Warren Buffett suggests that we all do in 2021 and forever.
Warren?
First one was, what should you invest in now?
Right.
I think somebody like LeBron, and we've talked about it, but I think...
You and LeBron have talked about it?
Occasionally. I think actually if through the rest of his career, and beyond in terms of earning power then, just making monthly investments in a low-cost index fund makes a lot of sense. I think that somebody in his position ought to have a significant cash reserve and whatever makes them comfortable. And then beyond that, owning a piece of America, a diversified piece, bought over time, held for 30 or 40 years, it's bound to do well. And the income will go up over the years, and there's really nothing to worry about. Usually the simplest is the best.
What does that mean?
I mean something like just owning the United States, at a decent average price bought over time. You really can't go wrong with that. Now, somebody else will end up doing better with this or that, but somebody will end up doing a lot worse with this or that too. And their expertise is making a lot of money doing something they do extremely well, but they aren't going to generally be able to take the time to become a professional investor too. And so it's the same advice I give 99% of people.
Buy an index fund.
And doing it over time and starting early, starting young in life. And nobody's ever followed that and gotten other than a decent result. Nobody.
He was so confident that this strategy works that he put a $1 million bet in front of a collection of hedge fund investors that $1 million in an index fund that tracks the S&P 500 would outperform whatever active investments that they choose to pursue. And he won that bet in a landslide. Pick a safe and simple route that has proven itself time and time again, or the simplest route, as Americans like to say. Sorry, accent differences. And here's a fun fact for you. 95% of the best investors in the world do not outperform the overall S&P 500 index over a 10, 15, 20-year period. So why even try? You have a formula in front of you that he's laid out that is so successful and so simple that he believes that 99% of people should be doing it. Like Buffett always says, invest in the things that you understand, and he acknowledges that not everybody understands as much of the investing world and financial world that he does. But what we do understand is that America is a great country. It always has been. It always will be. And if you believe in it, then why not just invest in it? And the only other step, and it's an extremely important step, is to invest regularly over a long period of time and hold forever. Hold for decades.
And doing it over time and starting early, starting young in life. Nobody's ever followed that and gotten other than a decent result.
Now, I know that might sound intimidating to people. Are you supposed to invest your money every month forever? Yeah, and I'll tell you why. There are a few reasons why, and they make an enormous difference. The first reason is that through your life, ideally, you are going to acquire more and more and more money. And every time you invest more money, you have potential to make more money. Think about this. If you had $10,000 to invest and you chose to invest on day one and then never again, you just invest one time, you make whatever that $10,000 earns. But instead, if you invest a couple $100 every month, after a certain amount of time, you would have invested more than that $10,000, which is going to generate you even more profit as the time goes on. Now, the second benefit of long-term regular investing is that it takes all of the emotions out of it. Because you're investing every 2 weeks, every month, every 3 months, you're not worrying about the prices. You're going to be buying on the same day of every month, regardless of what the stock market is doing, which means you'll be buying all along the curve. So you don't actually need to worry about what the market's doing, and you can take all the emotions out of it, which is way more effective than you might realize. To use a popular Reddit term, TLDR, too long didn't read, here's what I want your takeaways to be from this video. Number 1, keeping it simple is usually the best approach. Number 2, you can always bet on America. Make sure to invest regularly and for the long term and try to hold for decades. I am not a financial advisor. This is Warren Buffett's advice, not my advice. If it's good enough for Buffett and it's good enough for LeBron James, then it's good enough for me. Thank you so much for joining me. If you enjoyed the video, give it a thumbs up, subscribe if you want to hear more from me, and I'll catch you next time. See ya!